Hello, my name is Augustine Ketoglu. Welcome to Augwood Forex Captured Trading Signals Video 4. I want to encourage you, if you have not yet watched video 1, 2, and 3, try as much as possible to watch those series of videos at our website at www.augwoodforex.com, and you'll be blessed by watching those series of videos. Now today I'm continuing with video 4, but the picture before you is a flyer of my first video, and the contents are so wonderful. You will be able to get a fair idea of what the broker trading software looks like, how the trading software looks like, how to open and close trade, how to save a trading account statement, samples of captured trading signals by Augwood Forex, and also risk and reward ratio in Forex trading. And you can get this video also at YouTube. Just search for Augwood Forex at YouTube and you'll get access to this video and other videos also. I want to encourage you to learn how to trade Forex professionally. Now today I want to take you through the fundamental analysis aspects. I've been saying that Forex trading will be divided into two main groups. We have the fundamental section before the technical section. We have those who are experts in trading purely only fundamental, and we have those who are also specialized in technical trading. But today I want to show you a fundamental data that was released on the 4th of April, that is 2013, and at 4:40 a.m. GMT time by the Japan government, and that news is concerning their monetary policy statement. And the Japanese has to weaken their yen so that it can support or it can help their export sector. After they released this news, the impact was serious, and I want you to I want to show you how I was able to capture it. Now this is the fundamental trading section during the time they released the Japan monetary policy statement. And it appears that the Japanese will want to weaken the yen to favor their export sector when they released this statement, and the market started weakening right from that particular day, which is on the 4th of September 2013. And this is how the market is reacting to this particular news that was released by the Bank of Japan concerning their monetary policy statement. Now here I want to show you how important it is for you to place a trade and make use of one of the powerful tools that is that the broker has provided on the metaphor for you to use, and we call those powerful tools as stop loss and also take profit. It means that when you see an opportunity, you can place a trade and protect this particular trade with stop loss by measuring the stop loss. So your stop loss is your risk that you have put up, with the hope that if the market reverses against you, then your stop loss would have stopped you out of the market with these few pips as a loss. But if it moves in your favor, because I see this Japan monetary policy statement report as a buying opportunity for the euro, so therefore I took a buy position. But now that the price is moving in my direction, that means I am making profit. But assuming the price decided to reverse, I have this stop loss to stop me at a very small loss. But if it moves in my favor, then I will want to take a bigger share of what the market has. So currently you can see that I took a buy position and the market is moving in my favor. So this is it. This is one of the powerful tools in forex trading. So as a trader, you should be familiar with the use of stop loss, so this stop loss now is around, and the take profits is around 170 pips. And I want to see, now you can see that it's almost getting there. It's almost getting there. So with the use of take profit, immediately your trade gets to that particular line, it triggers it, and your take profit of 170 pips has been captured and deposited into your trading account. So that is the new balance that will now be added to your current account in your trading platform. So this is one of the powerful tools that we use, which is called the stop loss and take profit. Now you can see how the take profit works. So if the price moves in your favor to a certain point, you'll want to take your profit so that you can preserve your investments. Now I want to show you some of the Augwood Forex captured trading signal. Actually is the continuation for the series of videos that I've released. So if you watch video 1, 2 and 3, you can see where we have reached with the captured trading signals. We want to show you how Augwood Forex trades, their approach to forex trading. We are basically purely technical traders. Now here before us, this is one of our technical trading strategy that captured a signal. This is a moving average sell signal on 18th of September 2013 on pound USD currency pair. We made a loss of minus 69 pips in one day, which means that the day we took this particular trade is the same day our stop loss was hit, because I took this trade as a sell, meaning that I want the market to drop from this point, because I could see the market has seriously overbought. So, and when it got to this level, I know that it can pull back a bit before continuing, and I got a signal here for the sell, and this is where I enter my sell. And see how important stop loss is. As soon as I was wrong, whether I'm there or not, my stop loss will trigger and I would have had a limited loss. But assuming I didn't use stop loss, now the trade has gone against me over 100 pips, almost to 150 pips. Then that means instead of the 69 pips lost alone, because there's no stop loss, it would have been reading a serious drawdown, which can be a serious detriment to your account. So it's very important to use stop loss to protect your investment in forex trading. So this is it. Immediately I was wrong. You could see immediately I enter for a sell, hoping that the price will drop from here. The price reversed and it stopped me out at minus 69 pips in one day, which means it's the same day I was stopped out. Now this is another signal also, which is Fibonacci resistant sell signal on 19th September 2013 on pound USD. This particular signal, I missed it, because when the price, after I made a loss, the price shoot up and went and stopped at the Fibonacci 23% level neatly and reverse from that point. And this is where I'm supposed to quickly entered in, but by the time I wake up in the morning, the price has already started falling. So this trading signal, this sell signal on the 19th of September on pound USD was a missed signal. Now at this section, this is also moving average buy signal on 9th of September 2013 on the Euro JPY currency pair. This signal made 161 pips in 3 days. So you could see it from here, because we are purely signal traders. It is signals we trade. If we don't see a signal, we don't execute any trade. So you could see that this trade is based on this moving average, and we got a signal here and we got a confirmation here, and we went for the buy, and you could see that the buy has made 161 pips in 3 days. And you can get a confirmation at the bottom side here. You could see the trade appearing here. This is the date, the trade ID number. This is the date we placed the trade, and this is the type of trade, and at this particular size, and this is the currency pair, and this is the price at which we bought. So you could see everything is there, and this is the stop loss section, and this side is supposed to contain take profit. So all our signal has this to confirm that it is a genuine trading series captured signal. So you could see here the account balance, that when you convert, you could see that it's equivalent to 161 pips in 3 days. We mostly measure our profit in pips, so that we can use it to explain, to give you some other educational background, so that when you know that it's 160 pips and you are trading with $2 per a pip, that means you've now made $362 in that series. So as soon as we get you the pips, you can now multiply by the lot size, assuming you are the one trading. Now this is the next signal also. This is resistance zone sell signal on the 11th of September 2013 on the Euro JPY currency pair. It also made 86 pips in 1 day, which means that the day we took the signal, it was the same day we made this profit. And also you could also see the confirmation of this particular trade execution also down here. So all our Augwood, all the video from video 1 up to video 4, all the trades that we are taking, if you watch the bottom here, you will see the confirmation of the position we took, the trade ID number, and everything is there to show that yes, it is a real trading approach. So now this is the next one also. This is also a trend line buy signal on 18th of September 2013 on the Euro JPY currency pair. We made 211 pips in 2 days. As you can see from here, the market is trending, it's an upward trend, and there was a correction here to sit on the trend line, and we got a confirmation here also for a buy, and you can see it here, and that's how we took the position. This is the buy position that we took, and this is where the stop loss also is. So most of our trade comes with stop loss, because we want to be specific on how much we invest on each position we take. And as you can see, the market move in our favor, and this is the take profit there waiting. But it is not always you allow the market to hit your take profit. At times you can exit earlier than your take profit, but if your take profit is hit, that's great. That's great. So in summary, from on the 9th to 20th of September 2013, which is 2 weeks of trading, we had 3 trading signals on the pound USD. The first one made a loss of -69 pips in 1 day, and the second one was a missed opportunity that took 4 days to move, and it gave an average of more than 100 pips. Now on the Euro JPY, we had on the pound USD rather, we had 2 trading signals, and also on the Euro JPY we had 3 trading signals. Sorry for the mistake, it's supposed to be 3 and the 2 is here. So we see that the first one was 161 pips in 3 days. The second one also made a profit of 86 pips in 2 days, and the third one also made a profit of 211 pips in 2 days. So in all, we got this. In summary, pound USD made 1 loss out of the 2 signals we got, and also out of the 3 signals we got, the Euro JPY made all the 3 profit. So in all, in 2 weeks of trading, we made 330 89 pips in profit. So now when we come to risk and money management section, in video 1 we made a profit of 680 pips, and also in video 2 we made a profit of 685 pips. In video 3 there was 644 pips profit recorded, and also in video 4, which is what we are treating now, we recorded 389 pips in video 4. So in total it all sum up to 2,398 pips in 9 weeks. So if you watch video 1, you can see how we arrive at this total, video 2 also at this total, and video 3 also, for you to get a confirmation of what we are doing. Now we want to take a different approach to our money management. This is Augwood Forex money management approach. To trade safely, we advise that your initial trading process should contain the lowest risk, so that you can secure your equity before raising your lot size to be able to keep climbing as your profit comes in. So you increase your lot size based on the profit you've made on the lower risk level, so that if you start recording losses at the beginning, it will not affect you as such. So this is Augwood Forex trading money management approach. So let's assume with all this performance in the first 3 weeks of trading, let's assume you are having $10,000 equity, and you decide to start with 1% on each trade you take. So with this 680 pips profit, you would have made 6%, 6.8%, which is represented by $680 and profit, and your balance will now be at $10,680 in your first 3 weeks. Then on the subsequent 2 weeks, because you've now secured some profit of 6.8%, you can now increase your lot size to 1.5%, and the second video 2 give you a total profit of 685 pips in 2 weeks. So with 1.5 trading risk, you would have made 10.28%, which is represented by $1,028. So with this lot size now adding to your previous balance, your current balance will now be 11,708. And also because you now have some volume of percentage in store, you can now raise your lot size on your third attempt to 2% per trade. And also at that level, you could see that you made 644 pips. So multiply by the double lot size you are using comparing to your beginning level, you see that you would have recorded 12.88%, which is represented by $2,880. So this profit now will now be added to your previous balance, and now your current balance will now be 14,588. So you keep raising your lot size to a higher risk based on the profit you are making, so that you can continue to rise and rise as you continue to perform well in your trading. So let's assume that on the fourth attempt, on the video 4, we made 389 pips. Assuming you are trading 2.5% at a time, you would have made 9.73%, which is represented by $973, and this will also be added to your previous balance, and now you will now be having this new balance as $15,561. So this is and this rise is as a result of the accumulated pips you've recorded so far. So the accumulated pips now is 2,398 pips in 9 weeks. So if you trade this money management approach in 9 weeks with this performance, you would have been recording $15,561, which is advisable, so that if you start making losses at the 1% level, you still have enough room to bounce back and be able to continue to be building profit on your investment. So this is one of the secure way to trade Forex with your investment. Thank you once again. My name is Augustine Ketoglu. Watch out for video 5 for the continuation of this series, and you'll be blessed you do. And if you want to learn how to trade Forex professionally, you can visit our website augwoodforex.com, or you can contact us through these numbers, and we'll be able to attend to you to be able to learn how to trade Forex professionally. Thank you very much.